Good morning. Welcome to IG's early morning call. It's Thursday, the 16th of February. Let's take a look at the headlines on this trading day as we wait another stronger start across the European markets today. Another record high for the London FTSE 100. And we are so close to a new record high as well for the French CAC 40. Money also going into the German DAX on this Thursday morning. Good earnings this morning, giving us a little bit of a fillip today in terms of some of the indices. Got numbers out today coming through with gains already in Hong Kong for Standard Chartered. We've got good numbers out this morning from Centrica, from Commerzbank, from Nestle, from Airbus. All those stocks, we're looking at all those stocks, and presumably we're looking at a stronger start across the board with those improved earnings. And at the same time, though, on the economic agenda, a record Japan trade deficit, pushing the yen down to lows not seen so far this year. Let's take a look at volatility. Clearly, risk back on the agenda. 4 days in a row of losses for the volatility index, continuing to push these indices higher. Now, for those that have already seen, will have seen that I did some analysis on this record high yesterday. Just want to quickly repeat what's going on here, because there's some interesting projections as to where we go from here. A lot of clients asking how much higher will this market go? Well, we're currently up 19.72% from the lows here. Now, if you draw a line from the lows that we had back in October 2020, we're well into bull market, but you, technically speaking, shouldn't do that because we saw this new lower low here, which was lower than the low that we had on the 4th of March. So that is where we draw this line from. So we're at 19.72% up, which means we're not quite there yet in terms of bull market, like we've seen bull markets in France and Germany and Italy and Spain and so forth. But I thought perhaps it might be an interesting opportunity here just to work out where potentially we could well end up going. And the analysis would suggest that we should be looking at a record high of 84.56 in this current move. How do I get there? Well, using this projection analysis or extension analysis, we had this move up to the market to the highs on the 1st of December. Then this pulled back to a low, which was the low we had back on the 25th of April last year. It just happens to coincide with that. And it was around about the point of the 200-day moving average, which we got supported from. So what I've done is I've drawn an extension, or I've drawn a gap from this low at 72.96 to the high that we had here at 78.76 on the 17th of January. And I've drawn measured the distance between that line of support and that line of then resistance. And I projected that up from the break of that, which came on the 6th of February this year, 3rd of February, I beg your pardon. And that extension takes us up to 84.56. So how do you do this? Well, if you're long on this, your stop would go down in this area down here around about the 78.90 level. 80.26 is the record high we've seen today already on the market. And that, if you use this extension, that would presume a price target of 84.56 if you are long on the FTSE 100. Now, one would say, well, yeah, there's still a bit of catching up to do on some of the European markets. You look at some of the gains we've seen there from the lows we had in the German DAX back on the 30th of September. We're already up 32.57%, and we're very close to scoring levels not seen since the 2nd of February last year. So very close to one-year highs for the German DAX. In fact, closing the 24-hour markets yesterday at a new one-year high and building on that at the moment. That is, if you take that spike out that we saw, that little shooting star candle on the 9th of February. French CAC 40, just to quickly reiterate where we are there, and we are, as we speak, marching higher. We're just 0.5% away from this red line up here, which is the record high at 73.85, which we saw on the top of this head and shoulders pattern up here back in January 2022. So French markets making the most of some of the money as well that's going in there. Watching Airbus this morning, one of the stocks certainly to watch at the beginning of today's trade. Just wanted to quickly look at what's been happening in the overnight markets. There's not actually been that much of a move. If you look at what's been happening there, you can see on the Japanese markets, these are, of course, 24-hour markets, so it doesn't show you the close that we saw in the Japanese session today. But let me tell you, the Nikkei was up 0.75% on the cash trading day today. On the 24-hour markets, we're up just 0.16%. At 27,673. We'll take a look at the Japanese trade deficit numbers in just a minute, which has kept a lid on things, I think, there. This is the Australian markets, gaining on the session today by a margin of 0.5%. We're currently up 2/3 of 1% on the 24-hour markets at 74.14. So you can see off the lows that we had yesterday, striking lows not seen since the 13th of January. So that's a little bit of a move up, but it is just a small retracement in what is otherwise, at the moment at least, a market that is pretty much on the way down. Hang Seng Stock Index is interesting because that's bounced off this line of support that we had, which was established there back on that resistance at 26th of August last year. So you can see that we're using that on this chart here at 20,680, and it's indeed what we bounced up from. Today, we've seen well off the highs. We're up just 1/4% on the 24-hour markets there. So that's where we are in terms of some of the moves that we've seen in the Asia-Pacific markets. Yesterday, it was a day where we saw healthy gains pretty much across the US markets. Earnings coming through, which beating expectations yesterday. We saw a further 3% rise on from the near 20% gain we had in Airbnb the previous day. Airbnb is one of the NASDAQ companies. You can always tell a NASDAQ listed business because it's got a 4-symbol ticker. Airbnb is the ABNB is the ticker for Airbnb, and that was one of the component parts of the rise we saw yesterday in the NASDAQ. Red candle there today, not too far up and not too far away from the highs that we saw just a couple of days ago on the NASDAQ. The Dow, just to quickly reiterate what's happened there, strong day yesterday, but not quite as strong as the negativity we saw the previous day. But we are nonetheless at the top of what is now becoming this little bit of a channel that we've seen pretty much since the 17th of January. Now, let's move back and take a look at this economic data out overnight in Japan, where we saw a record trade deficit. And I just want to show the dollar yen. The dollar has been rising against the whole basket of currencies. So the fact the dollar's up against the yen is maybe taken as just how it is. Yesterday, we closed out at levels not seen since the 29th of December. Trade deficit widening to a record $26 billion. Exports rising by 3.5%, while imports jumping by 17.8% in January. Japan is a big importer of goods, and it doesn't produce its own oil, it doesn't produce its own base metals, so it does import a lot. And the worries are, of course, it continues to import these prices that we've got at the moment. Other numbers revealing that core machinery orders declined by 6.6% during the month. That also worse than expected. So that's what's happening with the dollar yen. Let's look at what's going on with the Australian dollar against the US dollar. Now, the Aussie dollar up against the US today. The Australian unemployment rate has risen from 3.5% to 3.7%. Higher interest rates hitting the growth of new jobs more than economists had expected. In January, the economy shed 11,500 jobs. We've been looking for an improvement by 21,900. Economists had expected a 3.5% read, but we got 3.7. RBA Governor Philip Lowe, during the Senate estimates in Canberra, saying about what's going on with the background to this. The headline in Australia today is, "How high will Lowe go?" The point is that Philip Lowe has been on this move to raise interest rates in Australia, and these are the consequences. Employers are beginning to say, we can't now afford staff because we're paying down debt. So that's the whole point about raising interest rates. It starts to restrict monetary policy. Later on today in the US, we've got 1:30 p.m. release of producer prices, forecast to rise by 0.4% in January month on month. We saw a negative 0.5% read in December. The initial jobless claims of the week, building permits and housing starts, Philadelphia Fed manufacturing index. Ahead of that, we've got the euro dollar trading not too far away from recent lows at 107.07. A quick snapshot of where we are in the euro dollar trade. You can see we're bouncing along not too far away from the recent bottom. I want to stay on the chart and just quickly run through some of these companies that are producing earnings this morning. Look at this. This is Standard Chartered. Now, Standard Chartered at 725.4. This stock was up 2.5% in the Chinese session or the Hong Kong session today. Standard Chartered has raised its key performance metric, announcing a new $1 billion share buyback program, 28% rise in annual pre-tax profit, global interest rate hikes boosting lending revenue. However, its fourth quarter adjusted pre-tax at $529 million was a slight disappointment against $769 million expected, but the stock is up 2.5% in Hong Kong. The uplift over last year, like that of other global banks, has been boosted by the aggressive central bank interest rate rises. Banks do benefit from this. It allows lenders to charge more for their lending after a near decade of near zero rates. The company also said its latest share buyback would start immediately. So looking at a 2.5% rise potentially for Standard Chartered at the start of today's session. Let's move on to what's happening in some of the other areas of the market. Centrica. Look at this blue box here for Centrica. from the lows we had back on the 21st of April to where we are today, 251% up. Centrica, big improvements in year-on-year earnings. EBITDA, 3.5 billion. We were looking at 1 billion last year. Operating profit, 2.8 billion, up from 392 million last year. Earnings per share, 34.2 pence against 2.8 pence last year. Dividend, 3 pence, up from nothing last year. So back to this strategy of paying back interest, spare cash to shareholders. The company says, though, the statutory operating loss was 240 million against 954 million last year, but there's been a big disposal over the last year. The company says it intends to extend the existing 250 million pound share buyback program by an additional 300 million. I don't know where this stock's going to go at the beginning of today's trade. We have seen this big uplift recently. In fact, a mini uplift we've seen from the recent lows at 93 pence to 98. So that was something like around about 5 or 6% of its stock has been added to in terms of value over the last few days. Interesting to see where Centrica ends up on the start of today's trade at the start of the hour. Staying on the charts, this is the old EADS. This is Airbus. Yesterday, big move up in the stock at 119.11. Posted a big rise in fourth quarter earnings today, reflecting an increase in revenue supported by higher commercial aircraft deliveries, increased contributions from Airbus Defence and Space and Airbus helicopters, and lots of firm orders coming through there. Fourth quarter net income, 1.67 billion euros at 2.13 per share, higher than the 1.5 billion we saw this time last year. So things looking good there as well for Airbus. Staying on the charts, just want to tell you I had another positive stock story this morning potentially. This is Nestle. It will open at 110 Swiss francs 67. It says it sees 2023 organic revenue of 6 to 8%. The estimates have been for 5.52%. Good earnings out this morning from the food company. A good outlook from the business. Could we see an uplift in that stock as well? If you're long on any of these, your stock goes below recent price action with a view to taking these up from the lows or from the close of last night's trade. So all those companies looking good potentially for the start of today's trade. Not a trade recommendation, but do look out potentially for upside on those stocks. Let's take a look at another share price of another company that has done well. Look at this uplift that we saw all sessions on the IG platform last night for the tech company CSCO Systems. It jumped initially 10% on its third quarter revenue forecast beat. It also saw reported better than expected second quarter results. 88 cents a share, we've been looking at 86. Revenues of 3.6 billion, we've been looking for 3.4 billion. But it's the outlook, I think, that really lifted this stock. The stock ended up 5%, so it was well off the highs at the close. But it's certainly going to be one of the big gainers at the start of today's cash session today. Looking ahead, we've got Applied Materials out this morning. Fourth quarter expectations, earnings per share $1.93 on revenues of 6.69 billion. That stock is not all sessions on the IG platform. Neither is WeWork. Another one reporting before the bell today on its fourth quarter. Loss per share expected at 43 cents on revenues of just shy of 850 million. And Shake Stack, fourth quarter expectations, loss per share 11 cents on revenues of 238 million. Just some of the companies reporting before the bell today. Let's get back to the charts. I want to show you this one. This is another nudge lower yesterday for the price of spot gold, taking us down there to levels not seen since the intraday back on the 5th of January. So we're not quite at 2023 lows, but very close to as a result of a stronger US dollar. A little bit of money going in there today, but not much. The trend still very much in place. And we've got a tight trading band we've seen this week so far for oil, currently trading at 85.74. I think as traders, we're going to get far more of a bite if you're looking at trading some of these equities out this morning. So not much given there in terms of what's going on for the price of oil. That's it. We've got about 15, 16 minutes until the start of today's European session. Do watch out for that raft of European companies today, looking potentially for an uplift in the stock of Standard Chartered here in the London markets across the European continent. Watch out for the likes of Commerzbank doing well, Nestle doing well, and other stocks I mentioned in the last 15 minutes. So it's been what I think is pretty good day in terms of some of the earnings out that we've seen. I just do want to go back very briefly to this chart of the FTSE 100 because as we speak we are nudging new record highs. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.